I said before, over here at the Simple Trader channel, we're looking for sniper entries. What you want to do most of the time is to avoid high resistance run. Off by a second, but you can't say it wasn't close. Hello and welcome to the Simple Trader channel. Today we'll be looking back at the Ustec again. So far I've taken a single trade. So I'm up 6% currently, and for I think it wasn't Thursday, it was Wednesday, our live recording in regards to the trade that I would have taken, but I got to the market a bit late, so I'll post the video nonetheless. Now, to explain this setup here, I think I'll just do like a quick showcase of the different areas that I was going for prior to the setup. I just wanted to make sure that the chart was annotated so that I'll be able to be in the trade once the opportunity presents itself. So for this model, I'll go over it each time. The most important thing to know as a trader is where the market is likely to go next, right? For me in particular, I chose to use a reversal type strategy. And what a reversal type strategy entails is a strategy that requires the trader to pinpoint when the market is going to do a reversal. This is typically followed by the market going in the opposing direction first before eventually reversing and continue in its intended direction. So what is the most important thing for traders to identify? Where is the market likely to go now, go next, and when, right? For the concept that I use, which is the smart money concept taught by ICT, market moves for two main reasons. The first is to go to liquidity, where there is buy stops and sell stops, places where traders are likely to put their stop losses after putting in their market entries, right? Places like swing highs, swing lows, relative equal highs, relative equal lows, because that's what they are taught in regards to what would be the best kind of setups. When you look at support and resistance level, certain zones, certain patterns. So what we are looking to do is to see if the market is willing to go to those areas, right? So those are the areas it's going to go to. The other areas it's going to go to is gaps, right? So whenever the market moves, the market doesn't move succinctly one way down or one way up. It fluctuates. It goes up, down, which creates swing highs and swing lows. Now, each candle that is printed during this process, you have a body portion, right? So say that there's a 1 minute candle printed. If it's the case that there's no candle that subsequently overlaps that candle, the space that's not traded to is what leaves a gap, right? And there are gaps where there's no candle at all, just a straight up gap in the market. The market travels to gap and the market travels to buy and sell order. So for my strategy, it is highlighting the key buy and sell liquidity areas that occurs during the normal trading session and having those as the primary area where reversals are likely. What are those areas? It is the London's high and low, which is between 2 a.m. New York Standard Time and 5 a.m. New York Standard Time. We have the PM session high and low, which is from 1:30 p.m. the previous day to 4 p.m. right? The highest high and the highest low between those areas will be marked out for both the London and the PM session. And then we have the daily highs and lows. What is the highest high and the highest low that is formed within a given day, right? From those, and then also you'd have the new week's opening gap. For this particular trading week, a gap was not formed, so I don't have it highlighted on the market. Once you have those, you have to move on to the next aspect, which is time. What is the appropriate time to take the trade? ICT over the years has demonstrated and highlighted key areas in the market where that is time specific, which allows us to enter into trades that is more than likely to play out. What are the specific times? So we highlighted that every single hour runs a kill zone, but in particular we're looking at the New York session opening and trading hours, which is from 9:30 a.m. to 12 noon, which is quoted as the lunch hour. Now, for my particular setup that I'm looking for, I'm going to be looking at 9:30 a.m. through to 12 to see if I can find a trade that fits within this particular hour, right? So that's the general area that we're looking for. But what I'm looking for specifically is from 9:30 to 10:30, right? If I'm unable to find a setup, then I'll call it a day in regards to the trading session. Now, once you highlighted this area, this is what's important next. Because what tends to happen is that people look into the ICT concepts and they pick the part that they like, but they ignore key in the areas that ICT highlights that must stay consistent in order for these strategies to work. You have to pay very close attention to news. The strategies won't work in high resistant days, right? ICT is the only one that can pull off these extreme clutch type of trading strategies in the high resistance days because he's been using the strategy for 30 years. I personally haven't, and so I want to make sure that I'm in the perfect market conditions that will support my trade. Because as I said in a video that I did, I believe day before yesterday, Wednesday, is that if you're in a market where your A plus setup isn't playing out, that simply means that if your A plus setup fails, that simply means that you're in a market that is not willing to support the type of trade setups that you're looking for, which means that you should just forego it, take a loss and move on to the next session, right? So now that you've pinpointed, you want to make sure the news. So here are the rules for the news. If it's a 8:30 high impact news, meaning that's a red folder. Now you have different types of red folder news. You have the type of red folder news that is things like CPI. you have CPI, you have PPI, you have non-farm payroll. For those red folder news, even if it's at 8:30, you want to avoid the morning session. However, for like normal news that isn't one of those high key news at 8:30, you want to be in the pre-session to take advantage of that volume at 8:30, right? If it's the case that there is a red folder news at all, you won't start looking for trade until 9:50 a.m. In the morning, right? So you look for the pre-session, which is 8:30 a.m. if it's none of those high key news, and for after the normal session after 9:30, you won't look for a trade setup until it is 9:50 a.m. if it's a red folder news. Now, if it's one of those high impact news, say CPI or PPI, it's best to just look in the afternoon because you're going to get a lot better setups there, right? So now that you've highlighted the conditions to even consider going in the market, what time, right? It's important now to see where is the market likely to go next. And we're going to be using this chart as an example. So on this chart, let me go ahead and remove this last dance here. I'll explain it a bit later, right? So what we have here? We have the market 9:30 aggressively running higher. What did it do? The areas that I highlighted, it took out the daily high, it took out London's high, right? So those are two major areas of liquidity that I pointed out earlier that would be important when it comes to seeing the narrative of the market. So the market opens higher, runs, takes out the buy side liquidity on the daily high, the buy side liquidity on the London side, which is strongly telling me that since liquidity on buy side has been taken, there is no need for the market to continue going higher. We're looking for a reversal. So now that we've highlighted where the market is likely to go next, which I predicted that it's going to be for a short, you're going to think of where are the low hanging fruits that I can get for an entry. Now for the strategy that I use, it's a sniper entry focus, meaning that I'm looking for the cleanest entries that I can find. So I'm losing a limit order to get in, and then I'm looking for low hanging fruit that can give me 1 to 5. So right here we see, so let's look at the different areas we can target. This here is a target, this here is a target, and this here is a target. But why did I put my stop below here? Because the entirety of this liquidity pool would be resting here, and it's in a bullish FEG. Let me go ahead and highlight this there. So the market has is doubly incentivized to actually run to this area, because not only is it sweeping liquidity in this area, it's also coming back down into this FEG to rebalance it. Right, now let's go ahead and take a look at the entry method. The most successful entry method that I find in using this reversal strategy is something that I dubbed last dance. Now this isn't an entry technique unique to me, because it's still using the ICT's FEG concepts, and it's a concept that ICT introduced to us as well. He just didn't give it a name, so I named it last dance, which is my favorite league item as a one-trick Darius main, right? Back when it was broken, but I digress. Right? So what's an FEG? An FEG is the gap that is formed when a candle is printed. So you're looking at the parts of the body that isn't traded to. So let's take a look at here, for example. This market opened here, ran lower, ran all the way up here and closed. But if you're taking a look at the body of the candle, how much of the body is traded to? So from this part here, this wick trades up to here, and up here from the body, this wick trades down to here. So the entirety of here would be the part where the body isn't traded to, and that would be the FEG. So for the last dance entry, it would be the last opposing FEG, meaning that the FEG that is printed on a bullish candle if you're looking to go lower, and the FEG that is printed on a bearish candle if you're looking for the reversal to go higher. So this was the last FEG printed before the reversal. So this is the last one printed, and then this candle here broke and closed below it for the reversal. The market trade up into it once, trade up into it twice, and then displaced lower. So right now we're at a 1 to 2.5. Now most traders you'd see typically would be pretty alright with 1 to 2, not 1 to 2, but 1 to 3, or just being content with having a 1 to 2 as a profitable trade. As I said before, over here at the Simple Trader channel, we're looking for sniper entries, right? So we're looking to get that nice 1 to 5 there, and we're not looking at it from a perspective as if we missed this 1 to 5 here, or we could have taken a 1 to 2, that it's the end of the world. So what are we looking at right now? Let's go ahead and read the chart in real time, right? So what we're looking at is here. The market is stuck in a bullish FEG. So what we want to see happen is the market break and close below here. Once that happens, it'll be safe to put the stops back in break even and allow it to run to the intended target. The reason being, if the market is sitting in this bullish FEG, if the market is sitting in this bullish FEG and it's not breaking and closing below it, it simply means that there is a possibility that the market would do a reversal back up into the last dance before continuing lower, or it could be the case that it's doing a reversal, a complete reversal, in which case we'll take the loss and Yes, and we'll just simply look to the next session. But what we want to do is not to stifle the trade. We want to allow the opportunity for retracements. We want to allow the opportunity for retracements. All right, so right now we're moving over to, we're in the 20 minutes marker. Typically this is where the market, the algorithm chips in, and whichever direction the market, the program is in, is the one that it will aggressively run into. So this is the 10 a.m. kill zone. So typically what we can expect is a bit of retracement for the 10 a.m. and then aggressively running lower. So right now we'll just be looking at it. So this would be like a good time for you guys to tell me, you can drop in the comment section below like how long you've been trading, and if it's the case where you've taken a funded challenge where you're able to pass both or just one section, or if there's anyone in there that managed to actually get a payout, and which platform that you use to actually get a payout. For me, it was I was using I think it was the funded trader. That was the first one that I was planning to use, because I really liked how they set up the challenges at the time. But if you're not aware, the funded that prop firm got deleted. So right now my eyes is mainly on the FTMO challenge because it's been around the longest, and when I did my research, it has that's the best reputation in regards to it. So that's the one that I'm planning to take on. Right now I'm in university. I'm in I finished my exam, so I'm pretty much in downtime right now. So I'm going to be looking for a job. So the first challenge I'm going to be taking on, it's not going to be some crazy 100k challenge. It's going to be probably like the 10k challenge for like $105, probably 115 after tax, and then I'll try to scale up from there. But what's most important is that you find a solid strategy. I personally recommend trying to find a model for you that works, that's in the ICT smart money concept. Find a model for that and stick to it, right? Create a good risk to reward ratio, create a good drawdown ratio, like how to combat drawdown. Because the thing that has plagued me the most, because I've been trading for some time now, the thing that's plagued me the most, I have found successful strategies throughout the years, but the thing that has plagued me the most is trying to do it in a rush, over trading and things like those. It's been the biggest obstacle in my way, and in backtesting this strategy in particular for the last 4 months, what I've found to be the most helpful is the idea of removing the idea of the fear of missing out, right? So instead of trying to find that one trade in the morning session from like 9:30 a.m. to 12, if it's the case where the obvious A+ setup doesn't work, then I would just simply look to the afternoon session and look for a trade there, right? Because what you want to do most of the time is to avoid high resistance run. You want to avoid times when it's going to be high resistance. Right? You want to avoid time that it's going to be high resistance, and you want to be focusing on time where it is low resistance. So if you're in this trade right now, the minute that it reaches the bullish FEG, you need to keep in mind that that could be the low hanging fruit target. That could be the low hanging fruit target. For me personally, I am looking to get that 1 to 5. But if you're the type of trader that's okay with a 1 to 4, you're okay with just taking off partials. So at this point you could have taken off 1 to 3 and left the rest to run, that's fine. But I'm looking for that 1 to 5, so I'll be holding out for it. My stops is in break even, so even if it's the reverse, I believe the lesson in regards to the idea behind this trade will still be conveyed, and we'll still be looking on, because remember, we have the entire year to trade. All right, so as I said before, just moving on to the next trading session. There's so many times that I've been in the market and then in the morning session it's absolutely horrible, right? And I'm thinking to myself, why is it that? And I'm thinking to myself, and I look into the afternoon session, I realize that there was like a 1, 2, 3 easy setup, and I was saying that if I just only call it a day and just move on or just leave it, or I'll go into the next day and the setup that I look for, the A plus setup, just comes out of no, it's just easy, clean, smooth. And guess what? I'm already down 20-25%. So when I get a 5, 6, 7% this day, I'm still in loss, right? It's proven that the concept worked, but I'm still in loss. So it has always been frustrating. So as I said before, and I keep saying, if it's the case that your A plus setup fails, it is your model telling you that you're not in market conditions to support your trade. Watch the news, look to see if the afternoon session would be better, take the afternoon session trading. That's the best advice I can give to you. As a trader that's been trading for so long, finding success over and over again, but just crashing and burning in like a single day. That's the best advice I can give to you. So what I did right there is that I changed the color from orange to, I changed it from green to orange to indicate that it's been used as an inverted FEG. So if you look here, this candle particularly closed below it, trade back up into here, right? And now it's rejecting. I am looking to see, so this is the midpoint of the FEG right here. I'm looking to see it dig into here in particular. So if it doesn't dig in there by 10:10, which whereas the 20 minutes of the macro would end, I'll simply close the trade out and take the 1 to 4 or 1 to 3 or whatever it's going. Let's see if I can get this snipe here real quick. Boom! Off by a second, but you can't say it wasn't close. Alright guys, thank you so much for watching. If this proved to be valuable for you guys, if this is the type of content you want to see, if you want more information on my trading strategy, please leave it in the comment section below. Thank you again so much for watching. Simple Trader out.